Hello guys and welcome to my YouTube channel. In today's video I'm going to be sharing with you a very powerful gold strategy that you can use to trade gold. Okay, now this strategy I'm also using it to trade Eurusd and gbpusd. This is a live trading account. Okay, as you can see the account is in profit. So this strategy is going to help you trade the financial market profitably. Now in this strategy I'm going to be giving you three simple methods that you're going to be using to trade gold. All right, I'm going to be giving you three trading methods that you're going to be using. This is going to be a combination of simple indicators and price action, all right, to be able to help you navigate this market profitably. Now the very first thing you have to understand before taking trades is trying to figure out the direction of the market. And in this particular strategy we are going to be taking all of our trades only in the direction of the market. We are not going to be taking any trade that is going against the direction of the market. Why? Because this particular strategy you are going to be focusing on taking only the highest probability trade that's available in the market. If there's no high probability trades, we're not going to be taking any particular trade. And in this particular trade I'm in profit, like I'm in very deep profit. Okay, I'm in very deep profit. I've started selling from this zone and we are in profit. We're in profit in all of the positions. These are my 4 favorite trading accounts, and in all of my trading devices, in all of my phones, I am also in profit. In this particular trade, the very first thing you have to understand is that you have to always try and understand the direction the market is heading to. Okay, if you don't understand the direction the market is heading to, it will be somehow difficult for you to be consistently profitable. Okay, you have to understand the direction that the market is going to. Is this market selling long term or it is buying long term? If the market is not selling long term, then we can buy and sell. Okay, but if on the long run this market is bullish, then we should only focus on buying trades. But if the market is bearish, we should only focus on bearish trade. Now I'm going to be giving you 2 more confluence that you're going to always check out for every single day. You have to check out these 3 things. The first one is checking the direction of the trend, which is going to higher time frames. Okay, now the second confirmation, okay, that you're going to be using is this particular indicators. All right, and I'm going to be showing you how to set up your indicator. Let me quickly delete all the indicators. Let me delete all the indicators. Now we have a plain chart, so let's quickly set up the indicator. And so now click on this F icon. All right, so the first indicator we're going to be using is the MACD. So your MACD, these are the properties that you're going to be using. Your fast EMA is 12, your slow EMA is 26, your MACD SMA is 9. Apply to close. All right, so in your levels, use level 90, level 50, level 10. All right, so these are the 3 levels you're going to be using. In your style, use color black and use 1 pixel or 2 pixel. All right, so when you have that, you click done. Okay, so in your style, your mean, use color black. In your signal, use color red. Okay, or you can just use the default settings right here. So when you have all of that set up, you click on done. Okay, so now we have the MACD indicator in our chart. We have the MACD indicator in our chart. All right, so now let's go back to the F icon, okay, and add the second indicator, which is our moving average. Mind you have to add the moving average to this indicator window 1. All right, so you have to click on this icon right here. Make sure the indicator is added to the indicator window 1. All right, so you look for your moving average. Okay, so in your moving average, your period is 2, your shift is 0, your method is linear weighted. All right, then apply to first indicators data. Your levels is blank, time frame or time frame. So in your style, use color black. In your style, use color black and use 1 pixel or 2 pixel. So once you have all of this set up, you click on done. All right, so now we have the two indicators set up in our chart. As you can see, the MACD we just added is this particular black line that is tracing right here. Okay, and now these two indicators we have here is going to help you take very high probability trades. Okay, but this is not the only indicator. That's why I'm showing you this indicator. That's why I'm not showing you this indicator first. I first of all explain to you that you have to take trades in line with the trend of the market. But let me just quickly show you how to follow the trend of the market before we now step into this, because following and understanding the trend of the market is a very crucial aspect of trading that you have to understand. You have to go to the daily time frame or the weekly time frame. All right, you have to go to the daily time frame or the weekly time frame. From the weekly time frame, the market is selling. So now from the daily time frame, the market has been selling. Okay, the market sold from this point, got right here. From here it sold, you took out this particular low right here. The market took out the low, took out this particular low. Can you see? Price took out that low right here, and it went back upward. It could not break this high. Price could not break that high. Can you see? Price could not break this high. And all this is just an indication that this market is in a bearish trend. The market is selling. All right, so from here again, the market now sold and took out this low. Okay, and there's another low here. There's another low right here. There's another low right here. So price can be aiming for this particular low. Okay, and as you can see, we are in this trade. We are live in this trade. We are in deep profit in this particular trade. So I'm sharing with you something I'm using. It's not as if I'm not using this strategy. I'm also using this particular strategy. Okay, so now after figuring out the particular direction of the market, then the next thing you want to now do is now step down to lower time frames. Okay, like the 5-minute time frame. Now from the 5-minute time frame, you now start looking at the indicator. But in this particular scenario, as you can see now, there was a crossing. This red line crossed the black line right here. But we are not going to buy this market. Why are we not going to buy this market? This is where we should be trading. This place that the market, this red line crossed the black line, this is where we are meant to be trading. This is where we are meant to be taking trading entries. And as you can see here, now this particular zone, it was the Asian session. It was the Asian session. And as soon as the market entered London session from here, you cannot trade from here because this is the middle of the trend. But as soon as the market entered London session, the market now went upwards. It went upwards, trended upward. Okay, then this black line now crossed the red line. Okay, right here, it was somehow like a reversal. Okay, and as soon as this black line crossed the red line, the market started selling. Now, why is this sell more pronounced than this particular buy? There was a buy that happened here initially, but this sell is more greater than this buy. Okay, if you are taking a buy trade from here when there was a change of structure, when the market started buying, because the market, this red line crossed the black line, if you started buying, you would have gotten only small trading profit, and before you know, the market will start reversing against you and eventually hit your stop loss. Why would that happen? It will happen because you are only looking at this indicator. You are not checking the direction of the market. You are not taking the trend of the market. You are not going to multiple time frames. You have not switched to 1 hour, 30 minutes, 15 minutes, and 5 minutes. You have to do all of this. You have to switch from all the time frames, looking at the market and try to figure out the overall trend of the market. Once you've gotten the overall trend of the market, you can now start trading in line with the trend of the market, because in this particular strategy, we are only going to be focusing on high probability trades. So any trade that is not a high probability trade, we're not going to take that trade. So that's why we're not going to take this buy right here. We're not going to be buying this market right here, because right here the market changed direction, but we're not going to be buying this market right here. Why? Because this market is not going in line with the direction of the market. This particular market is trending downward, so you should only be looking for selling opportunity in this particular trend. Even tomorrow I'll be looking for another selling opportunity. All right, so now, but when this particular market started going upward, then it now started selling, and as soon as the market started selling, it gave us the indication right here. it gave us the indication, change of character, and also can you see same candle, give us the confirmation right here. So if we had entered this trade right there, if we have entered this trade right here, can you see the massive profit that would have been in? So as soon as the market changed from Asian session to London session, it now gave us this particular trading opportunity. So do not forget the 3 things you need to know before taking any trade. Is the first one, you have to go to a higher time frame and figure out the trend of the market. Okay, once you figure out the trend of the market, you should only think of trading in line with the direction of the market. Then you can now use your indicator, you can use your indicators to look for change of character. That's the red line crossing the black line. All right, okay, but you're not going to be looking for anyhow crosses. The only kind of crosses you're going to be taking is crosses that happen during London session or New York session. Do not trade during Asian session. Do not trade during Asian session. So the crossing that you're going to be looking out for is the ones that happen during London session. Okay, and you cannot take any crossing that happen in the middle. It has to be at the extreme. Okay, for a sell trade, it has to be at the extreme right here. For a buy trade, it has to be at the extreme right here. Now this is a buy trade that is occurring right here. This is a buy trade. Can you see that the market is buying? The market has actually crossed this line right here. It has actually crossed this line, giving us this indication. We've been watching this thing happening right here, but we're not going to be taking this trade because the market might buy, but it will not get to this zone. It might not even get to this zone before it now start reversing backwards. Why would this market reverse backward? Because it is not in the line of the direction of the trend, and this particular trend is a bearish trend. The market is supposed to be selling, so we are not looking for any buying trade. No matter how sweet it is, we're not going to be looking for any buying trade. So thank you for watching this video. Do not forget to like this video. Do not forget to subscribe to this YouTube channel and turn on the notification bell. So guys, see you in the next video. God bless you.